Hi, this is Juliet, Young Orfiano. Welcome to my video. If this is your first time on my channel, please like, share, and subscribe so I can notify you if I have a new video. This is the continuation of part 21 about property, plant, and equipment. I discussed in part 21 about measurement after initial recognition. Just click above or the link below this video to watch part 21. In this video, I am going to tackle about the impairment of asset values. Impairment of asset values. There is an established principle that assets should not be carried in the statement of financial position at above their recoverable amount. An enterprise should write down the carrying value of an asset to its recoverable amount if the asset has suffered an impairment in value. An impairment loss is the amount by which the carrying amount of an asset exceeds its recoverable amount. Identifying an asset that may be impaired. An enterprise should assess at each reporting date whether there is any indication that an asset may be impaired. The minimum indicators of impairment in asset values are listed in paragraph 12 of IAS number 36, Impairment of Assets. These indicators are grouped into external sources and internal sources as enumerated as follows. External sources of information. Number 1. An asset's market value has declined significantly during the period. Number 2. Significant changes in technological, market, economic, or legal environment with adverse effect on the enterprise have taken place or will take place in the near future. Number 3. Market interest rates or other market rates of return on investments have increased during the period, which are likely to affect the discount rate used in calculating an asset's value in use and decrease the asset's recoverable amount materially. Number 4. The carrying amount of the net assets of the reporting enterprise is more than its market capitalization. Internal sources of information. Number 1. Evidence of obsolescence or physical damage of an asset. Number 2. Significant changes in the extent of manner in which an asset is used or is expected to be used with adverse effect on the enterprise. Number 3. Evidence indicating that the economic performance of an asset is or will be worse than expected. In addition to the stated list, an enterprise may identify other indications that an asset may be impaired. In making such assessment, materiality has to be considered. Measurement of recoverable amount. The recoverable amount of an asset should be measured as higher value of, first, the asset's net selling price, and second, the asset's value in use. The net selling price of an asset is the amount obtainable from the sale of an asset in an arm's length transaction between knowledgeable willing parties, less cost of disposal. Costs of disposal are incremental costs directly attributable to the disposal of an asset, excluding finance costs and income tax expense. If there is an active market in the asset, the net selling price should be based on the market value or on the price of recent transactions in similar assets. If there is no active market in the asset, it might be possible to estimate a net selling price using best estimates of what knowledgeable willing parties might pay in an arm's length transaction. An active market is a market where all the following conditions exist. First, the items traded within the market are homogeneous. Second, willing buyers and sellers can normally be found at any time. And third, prices are available to the public. The value in use of an asset is measured as the present value or discounted value of estimated future cash flows or inflows minus outflows expected to arise from the continuing use of an asset and from its disposal at the end of its useful life. The future cash flows should be estimated for the asset in its current condition. PAS or IAS number 36, paragraph number 27 provides the following basis for estimates of future cash flows. First, cash flow projection should be based on reasonable and supportable assumptions that represents management's best estimate of the set of economic conditions that will exist over the remaining useful life of the asset. Number 2, cash flow projection should be based on the most recent financial budgets or forecasts that have been approved by management covering a maximum period of 5 years unless a longer period can be justified. Number 3, cash flow projection beyond the period covered by most recent budgets or forecasts should be estimated by extrapolating the projections using a steady or declining growth rate for subsequent years unless an increasing rate can be justified. The estimates of future cash flows include: first, projection of cash inflows from continuing use of the asset. Second, projections of cash outflows that are necessarily incurred to generate the cash inflows from continuing use of the asset and that can be directly attributed or allocated to the asset. Number 3, net cash flows, if any, to be received or paid on disposal of the asset at the end of its useful life. The estimates of future cash flows should not include: first, future cash flow from restructuring to which the enterprise is not yet committed. Second, future capital expenditure that will improve or enhance the asset in excess of its originally assessed standard of performance. Number 3, cash flows from financing activities. Number 4, income tax receipts or payments. Recognition and measurement of impairment loss. If the recoverable amount of an asset is less than the carrying amount of the asset should be reduced to its recoverable amount. That reduction is an impairment loss. An impairment loss is recognized immediately as an expense in the statement of comprehensive income. However, for an asset carried at a revalued amount, the impairment loss is to be treated as a revaluation decrease to the extent of its revaluation surplus, and any excess should be recognized in profit or loss. When the amount estimated for an impairment loss is greater than the carrying amount of the asset to which it relates. An enterprise should recognize a liability. After the recognition of an impairment loss, the depreciation charge for the asset should be adjusted in future periods to allocate the asset's revised carrying amount, less its residual value, if any, on a systematic basis over its remaining useful life. Illustration of an impairment loss. Case number 1. ABC Company extracts natural gas and oil and has a drilling platform in the Nido Island. It is required by law to remove and dismantle the platform at the end of its useful life. Accordingly, the company has included in the accounts cost of removal and dismantling of the platform and uses this as the basis for its depreciation. The company reviewed its accounts to establish whether there has been an impairment in the value of the drilling platform. At that time, the carrying value of the asset on the balance sheet is 6.0 million. The company has received an offer of 5.6 million for the drilling platform from another oil company. The bidder would take over the cost and responsibility for removing and dismantling the platform at the end of its life. The present value of the estimated cash flows from the continued use of the asset is 6.6 million and the carrying amount for the provision for removing and dismantling the asset is 1.2 million. Analysis. Net selling price is 5.6 million. Value in use is 6.6 million. PV of cash flows less 1.2 million or the carrying amount of the provision for dismantling or 5.4 million. The recoverable amount therefore is the higher of the net selling price and value in use, which is 5.6 million, and the impairment loss is 0.4 million or 6.0 million less 5.6 million. The impairment is then recorded as follows. Debit impairment loss for 400,000 pesos and credit accumulated depreciation for 400,000 pesos. After reducing the asset to its recoverable amount, the depreciation charge on the asset should then be based on its new carrying amount, its estimated residual value, if any, and its estimated remaining useful life. Case number 2. DEF Manufacturing Company uses a machinery in its operations. The machinery was acquired on January 1st, 2007 at a cost of 550,000 pesos. It has an estimated useful life of 8 years and an estimated residual value of 50,000 pesos. At the end of its useful life, the company uses a straight line method of depreciation. As a result of a recent development in technology, DEF reviews the machinery for impairment. At the beginning of 2009, it is estimated that total remaining cash inflows attributable to the asset are estimated to be 600,000 pesos, which is 100,000 pesos at the end of each year. While total cash outflows in using and maintaining the machine are estimated to be 54,000 pesos a year, expected to be incurred at the end of each year. Based on current prices and the condition of the asset, DEF estimates the fair value of the machinery to be 200,000 pesos. The disposal cost of the asset is approximately 25,000 pesos. DEF plans to continue using the asset in production even at a significantly lower rate of utilization. The company's discount rate is 10%. Analysis and computations. The carrying value January 1st, 2009 cost is 550,000 pesos less accumulated depreciation 550,000 pesos less 50,000 pesos divided by 8 times 2 years is 125,000 pesos. The carrying value is 425,000 pesos. Recoverable cash inflows for the remaining 6 years. Cash inflows 100,000 pesos less cash outflows 54,000 pesos. The estimated future cash flow is 46,000 pesos. Value in use 46,000 pesos times 4.3553 is 200,344 pesos. 50,000 pesos times 0.5645 is 28,225 pesos. The total value in use is 228,569 pesos. The net selling price, fair market value, is 200,000 pesos less disposal cost, 25,000 pesos. The net selling price is 175,000 pesos. The value in use, which is 228,569 pesos, is the recoverable amount since it is higher than the net selling price of 175,000 pesos. The impairment loss carrying value is 425,000 pesos. Recoverable amount 228,567 pesos. The impairment loss is 196,433 pesos. The impairment loss is then recorded as debit impairment loss for 196,433 pesos. Credit accumulated depreciation for 196,433 pesos. Reversal of an impairment loss. An impairment loss recognized in prior years should be recovered if and only if there has been a change in the estimates used to determine the asset's recoverable amount since the last impairment loss was recognized. If there is a reversal of some of the previous impairment loss, the reversal of the impairment should be recognized immediately as income in the statement of comprehensive income, and the carrying amount of the asset should be increased to its new recoverable amount. However, under the cost model, the new recoverable amount should not exceed its carrying value as if no impairment loss has been previously recorded. For a complete illustration, consider the following. A piece of equipment costing 2,400,000 pesos and with accumulated depreciation of 600,000 pesos is tested for possible impairment. It is found to have a net selling price of 1,100,000 pesos and value in use of 1,200,000 pesos. It is further determined that the remaining useful life of the asset is 6 years. The impairment is then recorded as follows. Debit impairment loss for 600,000 pesos, credit accumulated depreciation for 600,000 pesos. The carrying value is 2,400,000 pesos less 600,000 pesos is equals to 1,800,000 pesos. Recoverable amount the higher between 1,100,000 pesos and 1,200,000 pesos. So, it's 1,200,000 pesos. The impairment loss is 600,000 pesos. Assuming that the enterprise uses a straight line method, the annual depreciation after recording impairment is 200,000 pesos, which is derived by dividing the recoverable amount or the adjusted carrying amount over the remaining useful life. Further, assume that 2 years after recording the initial impairment, the asset is evaluated and is found to have a recoverable amount of 900,000 pesos. The asset's carrying value and the recovery of impairment are computed as follows. Cost, 2,400,000 pesos. Accumulated depreciation, 600,000 pesos plus 600,000 pesos plus 2 multiplied by 200,000 pesos is 1,600,000 pesos. The carrying value is 800,000 pesos. Recoverable amount is 900,000 pesos. Increase in the value of the asset is 100,000 pesos. To test whether the recovery of 100,000 pesos as computed may be fully recognized, it is necessary to determine the limit on the carrying value of the asset after recording the recovery. Using the cost model, the asset should not be carried at an amount that exceeds its carrying value had no impairment loss been previously recorded. The asset illustrated earlier shall have a carrying value of 1,200,000 pesos if no impairment had been previously recorded as follows. Cost, 2,400,000 pesos. Accumulated depreciation prior to impairment is 600,000 pesos. Depreciation expense for 2 years, 1,800,000 pesos divided by 6 times 2 is 600,000 pesos. Total of 1,200,000 pesos. The carrying value, no impairment, is 1,200,000 pesos. Because the new recoverable amount does not exceed the carrying value had no impairment loss been recorded, the recovery of 100,000 pesos is fully recognized in profit or loss. The entry for the reversal of the impairment loss is as follows. Debit accumulated depreciation for 100,000 pesos. Credit recovery of previous impairment loss, 100,000 pesos. Assume instead that 2 years after recording the initial impairment, the asset is evaluated and is found to have a recoverable amount of 1,250,000 pesos. The increase in the asset value is computed as follows. Cost is 2,400,000 pesos. Accumulated depreciation, 600,000 pesos plus 600,000 pesos plus 2 multiplied by 200,000 pesos is 1,600,000 pesos. The carrying value is 800,000 pesos. Recoverable amount is 1,250,000 pesos. Increase in value, 450,000 pesos. If the full increase in asset value shall be recorded, the asset shall be carried at 1,250,000 pesos, which already exceeds the asset's carrying value had no impairment loss been recorded previously, which is 1,200,000 pesos. Cost is 2,400,000 pesos. Accumulated depreciation, prior to impairment, 600,000 pesos. Depreciation expense for 2 years, 1,800,000 pesos divided by 6 times 2 is 600,000 pesos, the total of 1,200,000 pesos. The carrying value, no impairment, is 1,200,000 pesos. The limit of the carrying value is therefore 1,200,000 pesos, and the recovery is recorded as follows. Debit accumulated depreciation for 400,000 pesos. Credit recovery of previous impairment loss for 400,000 pesos computed as 1,200,000 pesos less 800,000 pesos. The stated recovery may be computed as follows. Initial impairment loss, 600,000 pesos, recovered through lower depreciation after impairment. Without impairment, 300,000 pesos. With impairment, 200,000 pesos. Difference is 100,000 pesos multiplied by 2 years is 200,000 pesos. The limit on recovery is 400,000 pesos. Thank you for watching my video. I hope you learned something from this video. I did part 23 and continuation of this video wherein I discuss in part 23 about the impairment of an asset carried at revalued amount. Just click above or the link below this video to watch part 23. Don't forget to like, share, and subscribe on my channel so I can notify you if I have a new video. Once again, this is Juliet Yang Orfiano. See you on my next video.